Hello traders everywhere, Adam Hewison here, president and founder of INO and co-founder of MarketClub with your midday update for Friday the 18th of January. Well, crude oil makes its move, it's bullish, and Apple falters and Facebook gets primed. Let's be looking at all those stocks today and the crude oil market. So let's get started right away. We've got lots to cover. And we're going to go to my portfolio manager, and there's Amazon right at the very top. And Amazon, excuse me, Amazon's making or has made a 52-week high, and it still looks very, very good. There's the monthly signal that came in on January 7th at 263, and we're currently trading at 270. So the market does look good in a bull trend, likely to continue. You know we like that trade, being long Amazon, short Walmart. So let's go to our next market. Lots to cover today. Here's Apple. Apple not looking quite so good. Once again, under the $500 levels. We have to go back almost a year to see that happen, and let's just do that real quickly. So you can see all the way back here in early February. That's when we were trading below $500. So all of last year's gain pretty much is gone, and it still looks very defensive. The one thing I would kind of bring to your attention, this is a Fibonacci tool. Now the trend, all of our triangles with the exception of the daily are all negative. But if we go from the very high here, scratch this down to the lows here, we're getting into that 61.8% pullback zone, which should offer some support. But the other technical aspect of this, it could trade down to the $450 or even the $400 level. Would not rule that out. Competition in the smartphone market's very, very high, as I said, on Bloomberg television. So let's go back to our next market. This is crude oil. Crude oil, we're bullish on crude oil, made the move yesterday. It's been over the trend line. We talked about the trend line. Remember that trend line we talked about it all last week and on our show. Here's the trend line. Boom. Broke over it yesterday. The monthly kicked in. This market's going higher. All of our trade triangles are green, pointing to higher levels. I would not be surprised to see this market trade as high as the $100 level. So let's go to our next market. That's the Eurodollar. And that continues to hang in there above the 133 level. And while it's not bearish, and it still looks like it's building a pretty big base here, potentially to go high. Now, you could argue that the math isn't there, the things aren't great in Europe. Well, they're not particularly great here, but look at this base we're building. This is just really kind of just getting very, 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 very strong in my opinion. So I think if we were to see the market go over 134, we could actually take the 122 level to the 132 level and say, okay, let's go to 142. Why not? We've been there before. We were back there in September, and I think that's what you have to, that's September of 2011. We can go there again. So plus 100 right here. Very positive for this market. So let me clean the screen off and go to our next market. Lots to cover today, as I mentioned. And this is the NASDAQ. The NASDAQ is obviously, with Apple in there, is not looking so good. It is going to probably close higher for the week, but you can see it's just sort of faltering here. It's up against the previous highs. And if we look at a weekly chart, which is something I like to do on a Friday, you can see we closed last Friday at 3,125. It's 3,122, practically unchanged for the week. Okay, not a great sign, not either way, but we do have our monthly trade triangle still negative on this market, so that's not a good sign. So let's go to our next market we're looking at, and that's going to be gold. Gold has acted very, very well this week. In fact, we have a signal on the weeklies right here at 1693, and this is on spot gold. And I'm going to go back to a daily chart to show you this. Excuse me. So while this is coming out, just put a 3-month chart on there. Hang on just a second. Let me just refresh this page. And we'll take a look at gold. Anyway, it's the weekend. The markets are closed. We're closed on Monday, so there's quite a lot going on. So here's the gold. Let's get right up to it. It's a plus 70, so we know the trend is higher. It's up about $1 today. at 1689.40, and we'll see how this market plays out for us. Generally speaking, we had a signal on the gold market, and let's just go to 3 months, and here we are. There's the signal yesterday at 1693, currently trading at 1689. You can actually buy it lower than the signal. I have yet to see the monthly turn green yet, but it's certainly trying to make that trading range element a possibility that it is basing out. We have seen the pullback, the 61.8% pullback, Fibonacci retracement, and it looks like it's going to go higher. So let's just put a little bit of a Donchian trade channel in there up towards the top of the channel. Would not be surprised to see a little bit more back end filling before this market heads higher. Now silver, much the same thing. The Treasury actually sold out of silver. The demand was so high, highest in 5 years from investors. And it seems like we're going to see this market do well. Only the monthly trade triangle is still negative on this market. So generally speaking, it looks like we may have made a turn, and it looks like we want to go higher in this market. I'd like to see the monthly go higher, though. That's the key. Now, this is a daily chart on copper. Copper's plus 100, plus strong trend, higher for the week, and it looks like it wants to go even still higher. Walmart, you know, we've been negative on this market. We've been long Google, long Amazon, short Walmart, and it's working out really well. This market's gone nowhere for the past 3 or 4 days. I don't think it's going to go anywhere, and if things get good for the markets, they're going to be good for Amazon. So let's go to our next chart, and that's Morgan Stanley reported today. Big turnaround there. MS is the symbol, and we have been long this market. This is why I want to show you with the trade triangles, because the reality is we got long back here. This is on September 4th of last year at $15.34. Currently trading at $22.30. Now you can see this is the first signal we had. We got in here. Remember, I'm just going to just point this out to you, is that generally speaking, we use for stocks, we've talked about this before, and this is how to use the triangles successfully. So this was your initial entry right here. And that was at $15.34. You would have gotten out around here, and I think that's around $17. Let's call it 17. Let's call it 16.5. So this would have been a plus trade right here, and you would have gotten back in here. This level here is 17.10, and you're currently trading at 22.30. So you've got a nice $5 profit. So you're plus $5 on this particular trade, and that's since the beginning of December. So it's worked out really, really well. Let's just clear the screen. So remember, we got 15.34 here, and we got out here, and I'll tell you what that price is. Just give me 1 second. Let's clear the screen first, and just go back to this other mode. So 16. So you made $1.50, which is not bad. So you up about $6 or $7 on this stock since September of last year, which I think is pretty good. That's almost a 30% return on just this stock that was given up for dead on MS. So let's go to the S&P 500. This is the big exchange. You know, we're bullish on this. All of our trade triangles are green, indicating higher levels, and it's higher for the week, and it looks really good, I think, in my mind. Moving along to the Dow. Dow not quite so strong as the S&P 500, but it's still up there, really batting up against these highs. We still have the negative monthly trade triangle, which is not a good sign, and I really only want to get bullish if we see that turn green, and right now I don't think that's going to happen, at least today. So another big market to look at, Netflix. Netflix is really acting very well. It's basically, you've got the monthly at $84.95, currently trading at 100. Worked very well. The weekly, see where the weekly kicked in as well. But you would have used this as your original buy point. When you go from a red monthly trade triangle, let me show you how this works. When you go from a red, so let's say you have a red right here. Let's just call the color of this red. Monthly, that's the main trend right there. And when you get a green, like we did here, monthly, That's a reversal. Oh, hold on. Hang on. I'm not sure what happened there. Hang on. Anyway, that's a reversal of the trend. So you basically you would have gotten in the reversal from this trend. So red monthly down, green monthly up. And you can see it kicked in here at 1894. And it looks like it wants to go higher. So 1894 is about 16. It's about almost a 20, I'd say about a 17% return already. And it still looks good to us. If you clear the screen off here, and you scope this out further, you'll see that this market does have some legs and room to go. You see it actually has come down, boom, 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 boom. And you can see with the monthlies, they don't come in that often. So when they do come in, you want to really pay attention to them because it really does make a change in the direction of a market. So let's go to our next market. That's Intel. Intel was a big surprise, big loser today. And if you look at how the monthly was down, and the weekly was up, meaning you should have been out of the markets. You should not have chased this market on the upside. And I think that's where a lot of people, we were not bullish on this market at all. And suddenly, boom, you're down a bunch, 10% in one day practically, which is actually 7.77% to be totally precise, but nonetheless not a good thing. So be careful with Intel. Facebook, now this is a different matter. I want to share this idea with you. Basically, our monthly and weekly are positive, which that means is that fact the trend is up. Now, I think the opportunity here, I'm going to take my Fibonacci tool, click on the highs here, and drag this down to the lows. So I would say somewhere between 28, 29, and 28, I'd want to be a buyer of this Facebook market. I think potentially, first of all, this is what we're looking at. You do have the positive trend right here. Let me put red. I prefer red. You do have the positive trend right here, and that started at 24.25. Okay, the market is still in this red mode, still in this green monthly positive mode, and it's pulling back into support. I think support's going to come right around the midpoint of the Donchian trade channel and also the 50% pullback. I think if we pull back like this, I want to be a buyer because I think this market could go substantially higher. And the reason for that, they have developed and they're going to challenge Google in search. They have more data on all of their users than Google does, and it's going to be more valuable in my opinion. So I think this stock, now let's clear the screen up. Facebook is finally going to live up to its dreams. And if we scope this out even further, let's say a couple of years, we could easily see it get back up to 42, which would be a no sweat at all. And I think potentially it could go much, much higher. But this is the pullback to be looking to buy Facebook. I would say somewhere between 28 and 29 and 28, I think it's going to be the places to be looking to buy this stock. So let's go to our next market. And that's going to be, that's the Brazil index. Actually, that's going to be it for the day. I thought we had more, but we've covered through these pretty fast. That's the last stock we're going to be looking at is Facebook. But I'd really want you to be mentally prepared to look at this market and check it out. We think this is going to do very, very, very well. And looking at lastly, let's take a look at, we looked at this before, crude oil March. We looked at it early in the session, but this looks to us like it can go quite a bit higher. And based on our simple analysis of, let me clear the screen quickly, down to trade channels, just scope it in, and with a very simple trend line we showed you all last week. We were looking at this. It wasn't a surprise to anybody. And there's the breakout right there. And is the breakout right there. And it would look as though this market can go at least up to $100, which is the previous high here. That's what we're looking at. So that'd be a nice move, and it looks like it's made a base. I'm not sure what's going to happen with the hostages and all the stuff that's going on in the Middle East. Leave that to somebody else's analysis, but the market's telling you that something positive for crude oil is happening, and you need to be long this market. I'm Adam Hewison. Have a great weekend. We'll be back on Tuesday, not Monday, so have a great weekend. And we'll be looking at all the markets and the news over the weekend on Tuesday. So I'll see you then.